Hey, it's Raph from Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. You see, we all want more time to enjoy our family, our friends, a purpose that's greater than ourselves. The challenge is we spend a lot of our time going to work to make money in order to provide. Let me say that again. We take our precious time, we go to work, which is a good thing, but then we take that paycheck and then we provide for our family. But imagine a world where money could make you money, so you had a lot more time, a little less work, so that you could do the things that mattered most to you. That's what Everyday Investor TV show is all about. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on investment? Number 2, when do you get that return along with the money that you put in? 3, what is the minimum investment amount needed? And 4, you look them right into their pretty eyes and you ask them, what is the risk, the worst case scenario? Super excited about today's show. We're going to be talking about, wait for it, we'll be right back. Coming up, Kyle Ford teaches us how we can make money investing in the R5 strategy.
So you put a down payment down, you buy the property, and now you start making payments. As you're making those payments, you're building up equity. Or in this model, we are doing value-added renovations to increase the equity.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. Super excited about this show. We're going to be learning all about the R5 strategy. You don't know what that is? Me either. Wait for it. Kyle Ford is going to be teaching us how we can make money investing in the R5 strategy. Before we get to Kyle, let's go to our stock market expert, Omar Khan. Hello, Omar. What's happening in the world of stocks today?
Thanks, Rav. Omar Khan here with Data Trading, guys. Thanks, and welcome to the weekly market update, guys. Just want to give you a bit of background about what's going on right now in this particular week. This week is typically known as the Santa Claus rally. What that means is the last 5 trading days of the year in December, plus the first 2 trading days of January, are generally positive in the market. It hasn't been the case as much this year because the market is concerned about the Senate race in the United States, the state of Georgia. Now, what that means is if the Democrats win these last 2 seats, they will control the House, the Senate, and the presidency. And why that's a problem is because, generally speaking, if either party has too much control, the markets view it as being unfavorable. They like to have these checks and balances in place. So we could see a short-term sell-off. However, we are optimistic that with the recovering economy, the vaccinations underway from COVID, that we will see a good market in the year 2021. Anyways, back to you, Rob, and we'll see you guys next week.
Omar, thank you so much for that update. Always a pleasure to hear your wisdom. Kyle, thanks so much for being on the show, my friend.
Thanks for having me, Rav.
And also thank you so much for believing in the show so much that you're our sponsor, and very, very excited about that. I know you have a passion for teaching people, for nurturing, for educating, and breaking down what could be complex topics and make them very simple. I think we're kindred spirits. You have a lot more hair on your head than I do, but I appreciate working with like-minded people. Thank you so much.
Yeah, thanks again for having me, Rob. Excited for everything we're going to do.
Yes. Well, you're going to be on multiple times because there's a lot to be able to teach. You're going to teach us a strategy that's really worked well for you, but I want people to really know about your outfit. I mean, you are Canada's mortgage choice, the Kyle Ford mortgage team, and talk a little bit about, just how you got into investing, how you kind of broke into the mortgage space, helping the everyday person get a mortgage, but also helping people pull money out of their home to invest, helping people borrow money to invest, helping people to lend money to investors, but then they make a return. Kind of talk a little bit about how did Kyle Ford, who's a very savvy, active real estate investor, get into the mortgage space and why?
Yeah, so it started, I became an independent financial advisor when I was 23. So working with the traditional models, pay down your mortgage, put money in your RRSP and save for the future. It was while doing that I was dealing with some of the most successful people I knew in my natural market. And I was doing their projections and I wasn't really happy with what I saw. So I started exploring other avenues and I started looking at other ways to create wealth, and I got into real estate. Bought my first pre-construction condo, then a single family rental, started scaling from there into multiplexes, larger buildings, flipping, private lending, short-term rentals, vacation rentals. So really started scaling. What happened was as I was scaling, I was looking for a mortgage broker that could keep up. And I decided that, if you can't beat them, join them. So on January 1st, 2018, if that date's significant to anybody, that's the day the mortgage world changed. That's the way the day the stress test came out and everything changed. That's the day that I entered the mortgage space. I came in facing one of the biggest changes in this industry in a long time, with a fresh approach about how to do mortgages in today's world, not how they were done 20 years ago in today's world. So that's a little bit about me and where I came from and how I got here today.
Love it. I mean, basically what I heard you say was, necessity was the mother of invention. You needed a great person on your team, and there's lots and lots of great people out there in the mortgage space, and real estate brokers and accountants and lawyers, but we all have our own individual needs, and there was no one that really met your needs, so you decided to, hey, I'll become a broker to fund my own deals, but you also help other people. And I want to be clear, not just investors, anybody who needs a mortgage, you help them. Also, you help investors with all those types of things. So, Kyle, you've ramped this up. You're recently married, I think. Are you married or no?
Engaged. We just welcomed our son in June, Knox. So we got a little guy now. Wedding's next September. So a little bit of delay from COVID, but other than that, next September. Beautiful.
And what I was getting at with that is, you've had some time, of course, pouring your wisdom and love and friendship with your bride-to-be. But outside of that, you've been quite active. Talk a little bit about your portfolio. I mean, you just mentioned so many. I just want people to know how active you are in this space. This is not you that's done this 20 years ago and now you're trying to teach people in some university.
As of today, I own 18 properties as a whole. My door count is not as high as some people may think because I've transitioned a portion of the portfolio into short-term rentals, which isn't as many doors, but a very high revenue per door model. And then my specialty is the R5 strategy, which we're going to be talking about here today. Buying underperforming properties and driving up the revenue on the property as well as the value of the property. So I have the long-term portfolio, long-term rentals. I have the short-term portfolio as well as the private lending practice.
Love it. R5strategy.com. It's not live yet, but I'm sure it will be one day. So talk a little bit. Let's talk about the R5 strategy. What is the R5 strategy? How does it work?
Okay, so it's first of all, you require properties, renovate, rent, refinance, and repeat. So I know lots of people have heard of this as the BRRRR model, flip to yourself. Rav, you and I talked about this before. We like the R5 model.
The R5 model. So obviously, yes, we require a property. So how do we get that property? Are they mostly, Kyle, undervalued? And if so, how do you find them? Are they on the MLS? How are you going about requiring a property to start the strategy?
So a little bit of everything. Certainly, I highly recommend working with a great real estate team, a realtor on your real estate team that specializes in investment properties, knows how to get off-market deals, isn't afraid to door knock for you. So certainly we're working with a great realtor. We do some direct marketing as well. Some cold calling. We'll look up owners of the properties we're interested in. We'll call or contact them. In my short-term rental space, we've developed a reputation in that community where people know us as cottage buyers. So people are coming to us directly. So a little bit of a combination of everything. Get yourself out there. I tell every person I know, if you meet me within 5 minutes, I'm going to tell you that I buy houses. So if you know anybody looking to sell, I'm looking to buy. So everyone I meet knows that I buy houses.
Love it. So that's how we require. It's really acquire, but it wouldn't work with the R5 strategy. So we'll just use, we require, in order to do the strategy, you require a property. That works. Okay, secondly, we're renovating. What are we doing with renovations? I mean, is this a tear down and build up? Is this a little bit of lipstick, a little cut the plants in the front so they don't encroach the windows? Or is it in between? Like what is the renovation generally entail in terms of the ones that you like to do?
When I started, Rav, I don't think you can see online here today, but I have pretty soft hands. I'm not swinging the hammer myself. I've never been very handy. And before I wanted to buy real estate, my parents used to tell me all the time, you can't buy real estate. You don't know how to do anything. You don't know how to fix anything. So the very first properties that I bought, the first one was a new construction property. And then we bought what was called a turnkey property. It didn't need any work. It was ready to be rented out. Then, I wanted to move a little bit quicker. So I bought properties that just needed a little bit of work, a little bit of paint, a little bit of flooring, change out some light fixtures and some door hardware, and just try to add a little bit of value that way until I got more comfortable. And when I say comfortable, it wasn't comfortable with me doing the renovations. It was comfortable managing a team, managing people who are doing these renovations for me. From there, things have really taken off. You mentioned the big building we did. We did 10-plex, fully gutted the entire building. We just blew the roof off another building and put a second story on. We have a development and some new build stuff we're doing now. I still to this day believe that you don't want to over renovate everything. There's sometimes flooring, paint, trim, you're done. Sometimes you really need to do value added renovations to keep up with the property in the area to get the best return. Love it.
For this strategy, we, number one, require a property. Number two, we renovate. Three, and this is, three, we now rent it out. How do you find your tenants that are gonna be great tenants?
So we do a lot of Facebook Marketplace, Kijiji, realtor referrals. We're very open to the tenant swap strategy. If we have a tenant in one of our older buildings that maybe the building unit's not renovated, but they're a great tenant and they want an upgrade, we'd love to try to get tenants upgrading within our ecosystem. So a lot of the traditional, depending on the area, newspaper still works if you're looking for that older clientele, but predominantly Kijiji, Facebook, the online social media platforms to attract tenants.
And we're not taking any shortcuts. We're still doing our due diligence. We're making sure we're doing reference checks. If they come from a realtor, then that's all done. If they don't come from another realtor, you're still doing the work that needs to be done. No sentimentality. Yes?
100%. The tenant selection is the longest part of this process. It can be, but is by far the most vital, and that's what's going to give you that freedom of time that you talked about later on the end. If you spend the time to find a good tenant, you're going to be able to reap the rewards long term with this property.
5, I'm skipping 4. 5 is repeat. But we can only repeat if we're successful on 1, 2, 3, but where your major expertise comes in helping other people even, is refinancing. Kyle, what is refinancing? So you got the property, you renovate it, which is very important. Doesn't have to cost a lot of money, as you said. We're renting it out. Now, Kyle takes this to a bigwig lender. It could be a bank. It could be the other 100 and how many lenders in Canada that we use?
I don't know off the top of my head a lot. Hundreds, maybe even thousands.
Okay, so we have a lot of lenders out there. They see this property. They see that it's renovated. They see that it's rented out. So they look at the cash flow that's coming in. And now I'm able to what? What does refinance really mean? You're talking to a bunch of high school seniors behind me. What does Kyle say when the question comes up? How do I repeat? Where do I get the money from?
Right. So, and I've done this for many years now, dealing with those high school students, as well as mom and dads who have maybe never gone through a refi. And the first thing to talk about is whenever you've traditionally gotten a mortgage, you cut the check and start making payments. So you put a down payment down, you buy the property, and now you start making payments. As you're making those payments, you're building up equity. Or in this model, we are doing value-added renovations to increase the equity. Lenders are willing to lend up to 80% of a property value. So for easy math here, if you have a property that's owed $300,000 and it's worth $500,000, you can refinance up to $400,000. This is where some people get confused. So wait a second, I had a $300,000 mortgage, and now you're saying I'm going to refinance to $400,000. Where the heck did that $100,000 go? That is a check payable to you on closing, bank draft, Mr. Rav Toor. Here you are, certified funds to take on to your next deal.
Beautiful. Ravinder Toor, please. Ravinder Toor, send that check. Kyle, love having you on the show. We're going to take a quick break. When we come back, Kyle's going to break down the numbers, helping us to invest in the R5 strategy. Don't go anywhere. Everyday Investor continues in a moment.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to my good buddy Kyle Ford. We're talking about how we can make money investing in the R5 strategy. People know it as the BRRRR. No, I'm not cold. That's what it's called, the BRRRR method, however many. Kyle's come up with the R5 strategy. You acquire a property, you renovate that property, you rent it out, you pull money out, you refinance it, and then you repeat. Kyle, thank you so much for being on the show with me. Very, very excited to have your wisdom from an active investor and from somebody who helps other people do that as well, as you have a large mortgage outfit there, Canada's mortgage choice, the Kyle Ford Mortgage team. But teach us with numbers how we make money with the R5 strategy. So you, one of your more recent deals was where?
It was in Grand Bend, Ontario.
Okay, so here we are in Grand Bend, beautiful area. Okay, and what did we do there?
So I bought side-by-side cottages, so 2 cottages for $777,000.
Each or combined?
Combined. Everything today is going to be combined. One deal. It happens to be 2 properties, but one deal.
Beautiful. How much?
$777,000.
Okay. All right. So that's our purchase price. Now, of course, you didn't take that amount of money out of under the mattress. You had a down payment. So you put a down payment on this. What percent?
20% down, which is $155,000.
Okay. So 20%. And how much?
$155,000.
$155K. Okay, so Kyle, is that what it generally is in the cottage country? 20% down? Like, do we treat it? Do we treat it just like an investment property?
Yeah. Anytime you're buying a property that's not your primary residence, or any type of investment property, you're going to be required to put down a minimum of 20%.
Yes, but when sometimes, like, I didn't know if the lender necessarily needed to know that this is short term. Does it fall into commercial? Do you have to put down 30%, 35%? But you're saying if you're just buying a cottage as an investment, it's just treated like me buying one down the street in my neighborhood, 20% down.
Yeah, so most lenders are going to require a market rent appraisal. So that market rent appraisal is going to be the rental income that you're going to be able to use, not the short-term revenue that you might be able to generate, but whatever the property would rent long-term is how most of our A-rate lenders are going to treat that file.
So the government wants some money. So we have closing costs on this?
Yeah, $13,000.
Okay, so to close this property, $13K. Okay, so because we're in the business of requiring a property in order to renovate, how much money did we spend on renovation on this?
So between the two properties, it was a substantial renovation. We spent $240,000.
$240,000, okay. So to reno, we spent $240K. Any other money that was outlaid?
No, the $240,000 included the carrying costs on the properties as well while we were renovating. So that was our total investment.
Okay. What's that equal?
The down payment, closing costs, and renos?
Yeah. What's that add up to? 155 plus 240 is 365 plus 13, 378?
408. 408.
408. Okay. What am I talking about? See, that's why I have you. I should know this stuff. I'm Indian. Okay, so we're in this for $408,000. So was this Kyle's money, or where did we get this from?
We on this project, Chelsea and I took on a partner. So our partners provided the down payment and the renovation funds.
And would this be an equity deal? Is it a 50-50 split, or did you borrow the money and you're paying them an interest?
This is an equity split. We're 50-50 partners on the deal.
Okay, great. So how do we make money?
So after the renovation on the property, we had a new appraisal come in at $1,215,000.
Okay, so this is now $1,215,000.
Yep.
That's pretty significant. So what is our lift then? So we forced this upwards. How much did we make?
The forced depreciation on the property was $198,000.
$198,000, okay? And then just passively, this property would go up in value in a year's time. What percentage would you use?
So the Grand Bend market, as a lot of cottage country has been hot, and we're seeing double-digit appreciation in a lot of these. However, in the investing space, I advise everyone to be very conservative with this number. I'm very conservative. I use 3% as my number. So annually is $36,450.
So passively, 3%. How much?
$36,450.
36,450. Of course, there's some cash flow here. So how do you rent this out? Because of course, we've got our property, we renovate it, now we're renting it out, but it's cottage. So talk to me a little bit about how that works.
So we do, the way our structure is set up is Chelsea and I lease the property from our partner long term. So we pay a monthly lease rate to our partner on this property, and then we run the short-term rentals from there. So after management fees, after vacancy, after repairs and maintenance, our annual cash flow on each cottage is about $10,000 for our total $20,000 a year in annual cash flow net.
$20,000, okay, cash flow, and then they're paying down our mortgage.
The pay down on our mortgage, part of the reason we took a partner that had the ability to qualify for A-rate, great financing. Our annual mortgage pay down, our principal pay down is $25,400.
$25,400. We got some good numbers here. Okay, so these are our 4 ways that we're making money. We forced it up because of our renos. Passively, it just naturally goes up. Cash flow, mortgage pay down. What does that all add up to? 198, 36,450, 20K, and 25,400.
279,850.
279,850. We take this, we divide it by what we're in for. So 279,850 divided by $408,000 is
68.5% return on investment.
68.5%. And then we've got a partner in this deal. So this is basically 34% each. You did this basically. You didn't use any of your own money. You were the expert partner. Your partner was the money partner. They didn't have to think about a thing other than writing a check and getting it to you. And you both enjoyed 34%. If you did this on your own, you enjoyed 68%. We did all this work. We made 200 grand. So let's just take that 200 grand and we'll do another property. Add up these 3 numbers for me, Kyle. If you've got your calculator, what's 36,450 plus 20,000?
Yep.
Plus 25,400.
81,850.
Divided by 408,000.
20%.
20%. So if you do this by yourself, you make 20% and you put $200,000 shy a couple grand in your pocket. Beautiful. And the 5th R in the strategy is repeat. If you want, you take that 198,000 and you go do another one, maybe a little smaller. You do another one, because this was 2 cottages. So you could have take that $200,000 and do 1 cottage all by yourself, enjoy the 68% or the 20% all by yourself. And this is how you kind of keep doing it. How hard is it finding your team, your renovation team? Because you said, you don't do it yourself. Are you finding the GC, the general contractor? Are you finding him or her in Grand Bend, or are they traveling for you, or how does that work?
So we've done a little bit of both. When we started, it was very difficult, full transparency, to find reliable trades in a smaller town. So we started by importing. So I'm based out of Kitchener, a little over an hour drive. It was a pretty easy sell to tell my contractor they could stay at another cottage and while they renovate. So we started doing that. Over time, we've scaled in that market, and one at a time. We met a painter that was more of a local. Then we met an HVAC guy who did plumbing. So before we knew it, we started building a team out there as well. So one deal at a time, one step at a time. I probably wouldn't recommend someone go to a brand new market and do a brand new construction deal right out of the gate. But meet people, to network, talk. What I love about this small cottage country is, for the most part, everybody wants to help each other. People are happy if their brother's a painter or dad's an electrician. They're happy to share that information because they're all trying to improve their communities.
Love it. Listen, I know you love teaching people. I know you like helping people, coaching. We're going to have some everyday investor workshops coming up. Can't wait to have you there. But people can get a hold of you if they just want to say, hey, Kyle, can you nurture me? Can you coach me? The baby is there. You have to have some father time, some wifey time. But are you open to that for people learning from you?
Yeah, for sure. So if anyone shoots me an email, we can get a time booked up, 15 minutes to kind of connect, go from there. Happy to share some of my wisdom and knowledge, and certainly help from the financing side as well if you're looking for it.
Beautiful. Kyle, time's run up. Thank you so much for being on the show.
Thanks for having me, Rev.
And thank you, viewers at home or those listening via podcast. So grateful for you. Without you, we wouldn't have a show. Make sure you tune in next week, same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.